Hello there, my friends, and welcome back to another episode of TA with MK. My name is MK. Today's video, we're going to quickly talk about the S&P 500 and Bitcoin, kind of the confluence between the two, what they're doing, how price action is behaving, and ultimately what we would expect to be what Bitcoin does. Now, we're going to have some validations and invalidations to the upside, downside targets that we'll be looking for, kind of the way that I'm overall leaning, just so you kind of have an idea. But ultimately, it's a sit and wait game right now to see what, the S&P 500 does. There's some CPI data coming out this Thursday, which will be the catalyst, I believe, for the market to make its next major move. Now, often the move does tend to happen kind of leading into the news, the buy the rumor, sell the news type of an idea. And so we're kind of looking for the move to happen really within the next 24 to 48 hours, even though we're still 72 hours away from the CPI data. But anyway, we're going to talk about that in today's video. And if you guys are liking the content, please remember to like and subscribe, and let's go. It's TA with MK. It's TA with MK. All right, my friends, so we're going to start out real quick on the S&P 500, the SPX. This is the daily chart. It's closed for the day. It closed about an hour. Let's see. It actually closed about 2.5 hours ago, my time, here in the United States. Now, we will look at the ES1 mini futures here in a minute for the S&P 500, just to kind of see what it's doing, since it does trade after hours. It's 24/7, Monday through Friday. But I just want to quickly explain what I'm seeing, kind of in correlation with what price action's done the entire time it's been in this falling wedge, ever since it topped out at the beginning of the year in early January. And what it's done in correlation with its daily stochastic RSI and regular RSI. So if we double click and bring that up, I've made a vertical line each time that the stochastic RSI has left this overbought, so to speak, area, which is any time that you've reached above 80, and when it's crossed back down below 80, and basically most of the time went clear back down to the downside, right? As soon as it crossed down into that, each time I've indicated here, it has went all the way back down, reset itself back below 20 before ultimately coming back to the upside, and so forth, right? Rinse and repeat. Now, I will talk about this red one briefly that I made vertical line there. You'll see that each time that the white, indicated by my white vertical lines, that it left the overbought area, that price action was up here in the top of this upper trend line zone that I have, which kind of has an upper trend line and a lower one, making up a zone. I did the same thing on the bottom side. And each time that it's left that, it's revisited at least the top or the bottom of the lower trend line zone, right? Same with this one. It was up here in the top, zoomed out. You see it come from the time that it approached and reached oversold, it had bounced off the bottom trend line. Same thing here. It's up here in the top. By the time it gets down here at the bottom, it's bounced at the top of this zone. Same thing. In fact, this one before it ever even left. Oh, same thing here. It had kind of reached the upper or the lower end of this zone. It hadn't even quite reached it, but pretty close. And then by the time it reached oversold, bounced. So kind of just rinse and repeat. Price action more or less has been in this upper zone whenever the stochastic RSI has left overbought, and it's bounced somewhere on this lower trend line or the one just above it as it's left oversold, right? The red one being kind of the outlier, it actually crossed to the downside while it was still on support, which the reason I'm going to point that out is that we may be doing something similar now. And then it actually went on a pretty good little rally as it went back up to the upside, spent some time up there, and actually was able to reach this the top of this zone. So it's something that I would keep in mind as I give kind of both of my targets. But right now we are across, as the daily close today, the stochastic RSI is back below 20. Back below 80. It's at... It shows that the blue is actually at 62 and the orange, which is just behind it, is at 78. So both are below 80 and it has closed for the day. So it's confirmed to be back into this bearish area as it's crossing to the downside. However, we're closer to the bottom line of support than we are to the top line, right? So what does that mean? Well, it means one of two things. We can either expect the drop to be similar to what it's done all of these other times, or we can expect it to possibly consolidate for a little bit and then bounce similar to what it did here. Now, if it looks similar to what it did there, what I would be looking for is if we can push back above, basically, the top of this most recent little tiny high at about 3,800 and flip that as support, then I would expect us to run back up and tag this upper trend line. And at that point, that might also be where the moving averages are on the daily. Maybe we bump into them again like we did here. That would be my blue and yellow, the EMA, the 200 EMA and SMA. And that would be a run back up to possibly around 4,050, right? That's kind of my upside area. What I'm leaning more towards, I only brought that up because that would be a similar to move to kind of what it did here, right? On the red vertical line where it crossed back down, kind of bounced early. Price action didn't do a whole lot. That was this area here where it just kind of hovered for a little bit. Once that bounced down here, it went on this little rally right here, right to the upside. Well, if it did something similar, that's what I'm mentioning would be this target. What I'm leaning more towards is that we ultimately roll over and test this lower trend line, which would be somewhere between about 32.70 and maybe, you know, the lower end of like 31.50. Now, what would that look like as far as Bitcoin? What would my targets for it be? All right, now we're over here on the Bitcoin daily chart. Before I give my targets, I just wanted to point out or follow up on something that I mentioned in a recent video, as I kind of re-brought up the idea of price mirrors, something that I made a video about probably 6-8 months ago at this point, just one of my trading videos. If you want to look at it, I'll leave a link in the description, but I actually have a playlist that I put out that probably has 25 videos. I actually don't know how many it has, but I know it has more than 20 anyway, probably less than 35, but 25 to 30 videos that just kind of go over all the basics of trading, as far as if you're brand new and you're just trying to learn patterns and, you know, moving averages and some of these indicators and so forth. But one of the videos I put out, which is a shout out to a guy named Trip. He's in the trading group that I'm a paid group that I'm part of. It's Crypto Revolution. I'll also leave a link in that description. The leader of that group, his name's Chris. He's the one that taught me how to trade. But there's an admin in that group by the name of Trip that talks often about price mirrors, and that's who I had learned the idea from, anyways, when I made that video that's in the trading playlist. But I talked about this on a video recently, and in that video I made the point that, hey, we're approaching what would be the similar amount of days. Now, price mirrors aren't something that you really can trade solely based on it. You need to have confluence with other things, but the idea is that price will, you know, mirror what it did the first half. It'll do it the second half. Like in this case, you could put a vertical line straight down the middle and say, hey, you know, it did this on its way from point A to point B. Now from point B to point C, it should do something very similar to what it did, just the flip, right? And if I drag this over to 58 bars, which is where it should be, and we put another vertical line, that actually falls on October the 12th. That's 2 days from now. And I had mentioned in that previous video that I was going to start looking for a little bit more of a major move around that time frame. Now, does it need to be exact? Does it mean right on October 12th that something crazy is going to happen? No, that's not at all what it means, but it means that I want to be on the lookout for something similar to what happened back here to begin playing out sometime around the same amount of days. You know, we want confluence with a lot of other things. That's what we're going to talk about here in just a sec, is the other, you know, areas we'll be looking for as, you know, potentially to be to the upside and downside. But more or less what the reason why I would track something like a price mirror is it just tells me to be on the look for a more major move, you know, is on the horizon. And that's what I think anyway, based on the CPI data that's coming out Thursday. Ironically, that would be the day before that, you know, and I didn't even know there was CPI data coming out on the 13th when I spoke about this several days ago. It's just something I guess I looked at today and noticed that was coming up. So anyway, it would be kind of ironic that that would fall right around the time I was already expecting some sort of a major move. Now, does that mean the price mirror is going to actually pump back up to here? Or does it mean it's going to, you know, pump down to here? To me, this part is irrelevant. But it is somewhat relevant that there was just a major move that led into the beginning of this price mirror, and I'm expecting somewhat of a major move as it exits the potential price mirror, right? So what is our validations to the upside? Well, we have this trend line of horizontal resistance right here that's been acting as resistance once, twice, 3 times, 4 times, and most recently the 5th time. So a very, very valid trend line that if we were able to flip along with this area right here of previous resistance where it's been rejected here. So if we can break back above and hold on a 4-hour candle somewhere around, we'll just call it the top of the wicks, so maybe 20,000, about 450. Then I would expect in the short term to move at least back up here to honestly about 22K. It might be a little bit less. You might find some resistance back here in the 21,800, but somewhere between 21,800 and 22,000, that would be my first targets to the upside, and potentially even more after that, right? And we'll talk about that if and when it happens in the next day or two video. But to the downside, which is what I'm more leaning towards right now, but again, it hasn't broken down yet, so we wait for validation. But right now, as we're hovering on 19,000, which was the first target I actually spoke about the other day in my video, we're at that now. But if we do consolidate for a little bit more, maybe the next day or two, and we do reach this area, kind of over here on the 12th-ish, around that the day we just talked about, maybe the 13th when the CPI data comes out. If we lose this support right here at about 18,500, the first target I have would be just a very, very close target. I would expect us to revisit back down here at about 17,500. That would be our first target. At that point, you might expect a small bounce, maybe to retest the underside of this. But ultimately, I would expect new lows. I'd expect us to break down. And at that point, you know, we would be talking about targets back down probably somewhere around 16,000. Now, that wouldn't play out necessarily right away, but it could. You know, there's definitely a potential for a capitulation on the horizon. And so to see a price action break down, if it loses 17,500 and maybe come down here and revisit kind of like this area right down here where it was resistance and support, that can make sense, right? Right around 16,000. Maybe it bounces a little before. People might front run that for short-term trades to try to catch, you know, somewhat of a dead cat bounce that could happen from there. But keep those numbers in mind over the next 24 hours. Especially the next 24 to 48 hours, that if we break back above 20,000, about 450 to 20,500, if you want a nice round number, honestly expect a rally back up to over 21,000. Somewhere between 21,800 and 22,000. Might take 3 or 4 days, maybe a week to play out, but expect something like that to the upside. To the downside, if we get a 4-hour candle and especially a daily candle that closes back down here below around 18,400, at that point, I would expect us to revisit the lows from back in mid-June, and then we'll just kind of circle back and, you know, go from there. Okie dokie, and before we sign out for the day, let's just quickly talk about the ES1 or the S&P 500 E-mini futures. I don't expect a lot out of this, honestly, over the next day or even two, but since it does trade overnight and it's something we have to be weary of, that the Bitcoin move to the upside or downside could happen, you know, prior to the CPI data coming out on Thursday. This is what I would look for this. This would be what I think would front run Bitcoin upside or downside. If you see the ES1 or the S&P E-mini futures break back above and flip this area of 37 around 50 as support, I would expect it then to at least push up to here, and I do believe that would be the move that would get Bitcoin back up over 20,500, probably, you know, approaching 21K, and ultimately maybe even goes a little higher, and then, you know, we see Bitcoin reach, or the S&P 500 anyways, reach these moving averages, and Bitcoin reaches 21,800 to possibly 22K, right? That's what I'd be looking for to the upside, starting with this zone right here at 3750. Now, right now, I expect us, honestly, to just range over the next day or two, probably maybe one push up to here, you know, maybe back down here. But if we lose this support and flip it as resistance, which is around 3,600, just below where we're at now, then I'd expect us to trickle back down here. That would probably see Bitcoin move to 18K, and then if, you know, that support's lost, that's where I would expect Bitcoin to test 17,500 and then potentially put in even brand new lows. So be kind of watching the ES1. If you're somebody that does look at charts from time to time, keep an eye on this support level that it's at now, because if it loses that, that's going to be the, you know, the catapult that brings Bitcoin to the lower targets we spoke about. And if it can reflip 3750 as support and push higher, that's what we'll see Bitcoin move to the upper targets we talked about. And I appreciate you guys sticking around to the very, very end. And as always, if you're enjoying the content, please remember to like and subscribe. We'll catch you tomorrow. It's TIMECODES.